What's going on, guys? Some interesting developments today. It is completely possible that the bottom is now in on AMC. I'm going to get into that. Um, Pretty much, in my opinion, if we don't get some sort of crazy knife or drop on this court news tomorrow and Friday, in my opinion, the bottom is in. So if we don't break back into the $3 range tomorrow or Friday, in my opinion, the bottom is in, and from here we should be forming an uptrend, and that uptrend should be taking us to all-time highs, and more than likely the MOAS, in my opinion. So, with that being said, let's jump into the video. Starting with SPY, as we usually do, the macro on SPY, descending broadening wedge for a year, breakout, retest, reclaim the ascending triangle, the descending broadening wedge transition into an ascending triangle. So you reclaim the triangle here, sideways, breakout, gap up, and then we saw upside to 444. From there, we saw some downside, found a bounce off the 20 EMA here, and yesterday saw a nice bounce, and then today relatively flat. Ignore the glitch here. This is a glitch. This wick here goes all the way up to 453. Just ignore that. I've never seen a glitch on the SPY chart. I've seen it on AMC plenty of times, but I've never seen this on SPY, so that's interesting. So yeah, 62 days in a row closing over the 200 EMA. So 2 months closing over the 200 EMA. And Golden Cross on the daily, very, very bullish. The Golden Cross on the daily on S&P 500 is extremely bullish. Very, very bullish indicator. Look up the historical data for yourself. It's always followed by some serious upside. And the reason I touch on SPY in all of my videos is because both times that AMC squeezed, January and June, SPY was rallying to the upside. Very, very important. Some correlations here. And actually, from October 2022, SPY has done nothing but form higher highs and higher lows to the upside and break two macro patterns here. The descending broadening wedge broke out of that, retested, and then the ascending triangle broke out of that, retested, and found a bounce off. These levels that we're trading at right now on SPY, we have not seen since April 2022 all the way back here. So very, very bullish on SPY. SPY will be going to all-time highs relatively soon. This looks very good. Very bullish chart here. The symmetry on SPY, I've touched on this multiple times. The blue box would be your middle, where you have one break above the ascending triangle here. This red line would be the top of the ascending triangle, 418, multiple rejection points here. So the blue would be the middle of it, where you have your lowest low. You have one break above to retest the wedge here. Coming into the red, coming down, you break below this horizontal line at 380. You break below it on both red boxes. This one on the left came a little bit lower to retest the wedge down here. From there, you find a bounce up to 418 on the dot where you reject. Same over here. Into the green now, you come down, bounce perfectly off of 380 in both. And then from there, you find a bounce up to 430 where you have three touches on it, 1, 2, 3. And then over here, same thing, 1, 2, 3 before you break that. Next stop after that is 438 where you reject that, come down and break through it. Same exact thing we saw over here, 438, reject it, come down, break through it. And then from there, the next target would have been 450. We actually came up to 444. I mentioned that it was possible that 444 was the symmetrical equivalent to 450. From 450, we're expecting to come down, form support on 438 here. Having not reached 450 here, 444, I said it's possible we come down lower than 438, back to this 430, 429 range, and form support here before moving higher. And also just keep in mind that that rejection from 450 where you come down, you form a W here before moving higher. So it is possible that we form some kind of a W pattern here before moving higher. But overall, SPY looks very good. Just short term might be trading in this range 430 to 440, establishing some support here before we move higher. But overall, very, very bullish here. The uptrend on SPY, so this would have been the end of the ascending triangle here, where you fake out right here, come back into it, break out, and you have this bull trend that we had multiple bounces off of on the way up to 444. Pretty much double top there, and then you come down, gap below the bull trend here, and then we were in this descending channel for about a week. Actually broke out yesterday, and then today relatively sideways here. I'm not convinced with this being the retest here. So I'll just be cautious about that. It is possible that we come back down and retest on the top resistance of this descending channel, but still very bullish here. Just short term, might be relatively sideways in this range. Now, getting into AMC, and I mentioned this in my video on Friday, that we're going to be looking for a lower low now, 350 to 360 range. But I also said it does not have to be a lower low. I don't know if anyone remembers me saying that, but I said it on Friday. I said more than likely it will be a lower low where we would come back down to 350 to 360, but we don't have to. And now it looks like we are not going to be coming down to 35, 36 unless we get some kind of a crazy drop, a knife tomorrow or Friday on that court news. So it is very possible the bottom is in on AMC now, and we should be forming an uptrend that should be taking us to our squeeze and more than likely the MOAS, in my opinion. Once again, this would be the alternative macro perspective, where you have this descending trend line runs back pretty much to IPO. We're looking from 2017 here, comparably to the breakdown in the flag in November of our current cycle, where you have this descending trend line on both sides. You have this green box here where you come back up, the red is a cup, and then the blue you come down, bounce up, come all the way down, and then curl up. Same thing over here, you have the green, the red is a cup, you come down, bounce up in the blue, come down, curl up towards the end of it in both, and then from there you drop down to the flat portion here where you have 1, 2, 3 touches on the bottom before squeezing. So that is where we are now. We would be in this blue box here, having just rejected off of our third peak of the tri-peak and then coming back down to the final bottom on AMC, which would have been this right here. And it is possible that this was the bottom, not coming all the way back down to this green horizontal line here. I mentioned more than likely we would, but we didn't have to. It looks like this could have been the bottom here. That 10% move end of day today looked very, very good. So that's that. Same thing I just showed you, except I removed the boxes, the colored boxes off the flat portion here. So again, same thing. The green, this W type move, same over here. The red being this cup, same as this here. And the blue, you come down, bounce up, come all the way down, curl up towards the end. Come down, bounce up, come all the way down, curl up towards the end before you drop down to the flat portion here, where you have 1, 2, 3 touches on the bottom, and then you squeeze from there. So 1, 2, and then potentially this was our third bottom here. So I like showing this chart. I like removing, because when I have colored boxes on the flat portion, it's just clutter. There's a lot of shit going on. So I feel like it looks a little bit nicer like this. And then I showed this as well. The lines here, same thing I just showed you. 1, 2, 3, 4, 5, 6 takes you to the end of the blue. 1, 2, 3, 4, 5, 6 takes you into the blue. From there, you drop down to the flat portion where you have 1, 2 touches, your tri-peak, and then your third touch before you squeeze. 1, 2, your tri-peak, and then the third touch right here. So this looks very good. I have a question mark next to the 3 here, waiting for the third bottom. It is possible that this was our third bottom here. Again, if we don't get some kind of crazy move to the downside tomorrow or Friday on this court news, I am not expecting to come down to 3.5, 3.6. And in that case, the bottom would be in, and we should be forming an uptrend here. And that uptrend should break us out of this triangle, and that would be taking us to the squeeze the same way we saw back here. Except this time, the squeeze would be taking us a lot higher. I mentioned my price targets multiple times. We'll briefly mention it again, that my original price target of $140 is based off of macro Fibonacci extensions, and that would be lowballing, and that is not including, not accounting for the reverse split. People keep asking me this question. I keep answering it. My 140 price target is not accounting for the reverse split. So 140 would be an algorithm squeeze, the same way that we saw the January and the June squeeze here. 140 would be an algorithm squeeze the same way we saw back here, and the price target on that would be $140 based off of macro Fibonacci extensions, not accounting for the reverse split. So if we squeeze to 140 and the reverse split goes through, we're talking $1,400 per share, not 140. And then to extend on that, I'm leaning more towards MOAS than anything. 140 would not be the MOAS price target. That would be a macro Fibonacci extension, an algorithm squeeze, the same way we saw these past two squeezes here. The MOAS would be a straight line to more than likely ridiculous numbers. And that's pretty much that. So jumping into the micro now, and I showed this in my last video. Well, I'm going to keep touching on this, just updating the charts here. So again, right here, we would just be zooming in on the flat portion right here, this orange, purple, and blue box here, and this orange, purple, and blue box here. So comparing these two patterns right here, the flat portion at the end of the macro. So that's what we're zooming in now on the micro. And that's not it. That's what we're zooming in now. So the orange box would be the first bottom here, where you come down, you have some chop on the bottom of this range here before coming up to the top of that. Same thing over here. I mentioned multiple times the support and resistance of the current cycle are a lot tighter. The movement's a lot tighter, but still the same thing here. A lot of chop down here. That would be your first bottom. You come up to the top into the purple box now is more or less a cup. And you actually have a higher high on the right side of it. Same thing over here, higher high on the right side of it. And then coming down into the blue, it's more or less a W. This blue box here is what took you to the squeeze in January 2021, and that is where we are right now. So more or less a W, very symmetrical move as well, where you come down to your first bottom, you have a tri-peak in the middle of it, and then you come down to the second bottom with a slightly lower low. Before forming an uptrend and squeezing. So that is why I was looking for the lower low, the slightly lower low, 3.5 to 3.6 range, because that's how it played out back here. But I also mentioned that it does not have to be a lower low. And at this point, having saw that 10% rip end of day today on AMC, this looks pretty convincing for the bottom being in here, and this being the third bottom here. That is if we do not see a crazy drop Thursday or Friday this week on the court news. So if we don't see something crazy to the downside Thursday, Friday, I am leaning very heavily towards this being the bottom here. And it actually looks very similar to what you have here when you find your lower low. You have this cup move, and then if you remember me saying that we should be finding a reaction off of that bottom before you come back down and then you find the uptrend. It is very possible that this move, end of day today, and this 10% move, was that reaction off of the bottom. Very similar looking move here. It is possible that this was our bottom here, from which I would be expecting to come down anyway, but forming higher lows and finding an uptrend from that. As you come down from this right here, and then you have this uptrend here, and that takes you to your breakout, and the breakout takes you to the gap up, the macro fractal break, and then from there you squeeze. Going over this again, I have this white horizontal line drawn across on both sides from the second peak of the tri-peak where you find a bounce to the third. Same over here, second peak, find a bounce to the third, this white horizontal line running across. So in the blue box, when you come down, you actually break below this white horizontal line. You pop back above it, and that's when you come down to your first bottom. Same exact thing over here, coming down, you break below it, you pop back above it, and then you come back down to the first bottom. And that takes you to the tri-peak, same as over here. And then it runs right under the purple box here, and then right across the bottom of the W in the orange, and right above this gap right here on both, right above this gap here on both sides. You have a gap right here and a gap right here. This is a fractal break here. And yeah, that's pretty much it for the micro. And now getting into the micro time. Now, having said that it is very possible that the bottom is in here, and this was actually the third bottom we were looking for, this bottom that we carved out here, bottoming at 401 multiple times, we are moving through this much faster than what we saw in January 2021. So from the start of this flat portion here in January 2021 until your squeeze day was 342 days. So almost a year from the start of it until January 27th when we peaked on AMC in January. Now, from the start of it to the third bottom here, so from the beginning of this, from the beginning to the third bottom here, 320 days. From the beginning of this to the third bottom, and this is if this was the third bottom here, I'm leaning toward more that it is the third bottom. 209 days versus 320. So 110 days faster, 3 months faster, a little bit over 3 months actually, than the way it played out back here. So if this was the third bottom here, and it actually looks very similar to what we saw back here, we should come down from where we are right now, down probably back to the low $4 range, and start forming some higher lows the way we saw back here, and form this uptrend. And this uptrend would be taking us to our squeeze. It would more than likely, we would see this breakout here, the same way we saw in January 2021. So we have a very slow uptrend that takes us to the breakout, and then from the breakout, you just gap up and squeeze from there. So again, we are tracking this much faster than what we saw in January 2021, which is a very good thing. Less time that we have to wait until we actually squeeze. So getting into this on the micro now, and this is on Webull. I can't go on these time frames, the 15-minute. I can't go back this far on TradingView, so I'm just using Webull. And this is just showing, and this is just pure speculation. This is I'm speculating here that the bottom would be in. So you have this W here, followed by a bear flag here, downside. W here, followed by a bear flag of downside, before you get a knife right here as well, and then another W type move here, same as here, and then from there you get another knife that takes you all the way down to your first bottom. Here we just got a gap and then carved the bottom out. This just got candles intraday and then carved the bottom like that, and then this would have been the reaction that I was talking about off of the bottom, which it would be this candle here. And actually the volume profile matches it as well. Very low volume here, and then you have a spike in volume on this reaction off of the bottom here. Same as what we see right here. Very, very nice volume here on this pop today. This looks very good. So the way this played out in January 2021, and it doesn't have to be perfect, doesn't have to be the same, but from the bottom you form this ascending channel here, and this is where you find your uptrend. So you're rejecting the top of it, you come back down to the bottom, and you have this uptrend here where you keep bouncing off the bottom, you keep rejecting the top, you actually break below it slightly for a few days here before you reclaim, reject the top again, bounce off the bottom again, and then you gap up over it, and that gap over it actually takes you to your breakout. So that is what we're going to be looking for now. Again, speculating that this was actually our bottom. Again, if we don't drop down to the 3 range Thursday, Friday, tomorrow and Friday on that court news, I am very inclined to say that this was the bottom. This looks very good. Multiple bottoms, multiple wicks here to 401. Could not crack sub $4 here, and then found a very slight uptrend here. Pop yesterday, end of day, and then today another pop end of day on very, very nice volume here. This looks very good, playing out very similarly to what we saw back here, where you have this cup here, which is your bottom, where you carve a bottom here. This looks very similar to what we saw in January 2021. So now we are going to be looking to come back down from this, down to this trend here, and form an uptrend here. So for the millionth time this video, if we do not come sub $4 tomorrow or Friday this week, in my opinion, the bottom is in, and we are going to be trading in this channel here, riding in this channel, rejecting the top, holding support on the bottom, and this will be taking us to our breakout, and that breakout will be taking us to our squeeze. So this looks very good. I showed this yesterday as well. Again, I'm just showing the flat portion of January 2021 on the left, and the current cycle on the right. I have flags this time rather than the arrows. It's just a little bit easier to do it. I could just click rather than dragging the arrows. But the gap movements here are very, very similar. Again, in the orange, where you come down, you have this chop on the bottom here. You find your first gap right here, as we did right here. Same thing, where you come down, you have this chop. You find your first gap, pop up from that gap right here, come down, consolidate. Same as right here. And then you have another gap right there. Same as here. From there, you pop up even higher, retrace again, and then gap up again from there, which takes you to the top of the orange box. And then the same thing here. So the second pop right here, come back down, gap up, takes you the rest of the way to the top. So that would be that. The purple, you come down, you have a gap right here on the right side of it. The first gap, then you pop up from there, you consolidate, and then your second gap takes you to the top. Over here on this side, same thing. Your first gap right here, come back down, consolidate, and then your second gap right here takes you to the top. The blue, you have a gap down right here at the start of it. Come all the way down to that white horizontal line that I had drawn across. It's not here right now, but you break below it, come above it, and then you come down and you're flat before you gap down. Same thing here, break below it, come above it, come back down, you're flat before you gap down to the first bottom. Again, this was just a knife that we got after hours. This was 6 daily candles to get to the 6 daily candles to get to the bottom here. And then coming where you find a bounce there off the first bottom, you have this uptrend. This played out much faster over here. You gap up from there, same as here, into the tri-peak iteration, same as this. From the third peak of the tri-peak, you come down, and then you gap down here and then get the rest of the downside. So we came down, we gapped down, and potentially this was the rest of the downside here. So that is that. This looks very, very good. Very similar gap movements here. This looks very, very good. And then once again, and this is a newly updated projection where this would actually have been our bottom here. And I mentioned in my video yesterday that this was a very symmetrical move here, and that's what I'm going to be looking for over here as well. If the bottom is in fact in now, we should be coming down from this and forming this uptrend, which would break us out, and that breakout would be taking us to our squeeze. I mentioned this move is very symmetrical. It's a W. The tri-peak would be the middle of it, where you have your left leg, you have your right leg, you pop up, come down and up, pop up, come down and up. That would be your breakout on the right. You gap up from there, macro fractal break, straight line into the squeeze. And that's what I would be looking for over here as well, where the tri-peak would be the middle. You have your left leg of the W, you have your right leg of the W, assuming this is the bottom here. And then you pop up, come down and up, you pop up, come down and up, and then the gap up here would be taking us to our squeeze. So this looks very good. That is pretty much all the charts that I wanted to show for this video. This looks very good. This volume and this pump end of day today looks very, very good. Again, if we do not come down sub 4 Thursday or Friday this week, the bottom is in my opinion. So that is pretty much that. That's what we're going to be looking for. I want to hold this channel now. I want to hold this bottom trend and form an uptrend here. That's what I'm looking for now. Again, if we do not knife or see some kind of crazy red day tomorrow and Friday on that court news. So that's pretty much it for the video. I will catch you guys in the next one, depending on how tomorrow plays out. So tomorrow, if we don't knife or have a crazy drop sub 4, more than likely the way the day is going to go is we're going to come down and we're going to form support here, and then probably just be trading in this range here in this channel. So if that's the case tomorrow, if we're just trading in this channel still, I'm probably not going to make a video. The only way I'm making a video tomorrow pretty much is if something crazy happens. So a knife, if we just start straight lining, which I don't think we will, but who knows? I mean, this could straight line into the squeeze. Highly doubt that, but it is possible. If we don't see some kind of crazy shit tomorrow, more than likely I won't be making a video. I'll just make a video on Friday to recap the week, and that will be that. So I hope everyone has a good one, and I'll catch you guys in the next one. Actually, before I end it, because I keep seeing a lot of comments that are very similar. One of the comments, somebody asked me why I don't look at the June squeeze. Why I don't look at the June squeeze. I only look at the January squeeze. From either perspective that you're looking at this, either macro perspective, my original being that we're tracking this here, the flat portion, which is very similar. This would have been the green, red, and then blue here, comparably to the green, red, and blue here. That would lead up to the January squeeze. This squeeze actually broke the downtrend. This is just a downtrend the whole time. The squeeze breaks the downtrend. You come back down, retest, you form an uptrend, which takes you to the June squeeze. So this gap right here is the macro fractal break. That's when this fractal breaks here. So this, I'm looking at the January squeeze because either perspective, this one here, this macro perspective, or my original, this is what we're looking for, is this squeeze here. Now, I mentioned that this is a macro fractal break, and then this is one whole fractal here, up to this point here, where you gap down, and then you get all this movement. So this is a macro fractal from here to here. my two possible scenarios for price targets would be, number one, we get the same kind of squeeze here, which would be 140, and then you come down, form an uptrend, and then you MOAS at a later date. Or the next macro fractal that we get is the MOAS, and it would just be a straight line. It would look nothing like the January and June squeeze at all. It would look nothing like this. It would just be a straight line up to whatever the top would be of the MOAS, and then a straight line back down, pretty much. That's what it would look like. So again, the two possible scenarios, in my opinion, is this squeeze that we get, this breakout here. When we squeeze here, is the MOAS would be number one scenario. Number two scenario would be we go to 140, and then you would come back down, form an uptrend, and then MOAS at a later date. And again, 140 is not accounting for the reverse split. That is accounting for the price that we're trading at right now. So looking at macro Fibonacci extensions based off of AMC right this second, not including the reverse split, the squeeze would be taking us to 140. If the reverse split went through, then you're talking $1,400, not 140. I think that's it. 25 minutes. This video does not have to be this long. I'll catch you guys in the next one. Potentially making a video tomorrow, depending on if something crazy happens. If not, I'll make a video on Friday recapping the week.